Is this about a restoration of profit growth, or is HSBC sensing a shift rather in the global financial climate in Europe?
I think it's a combination of the two. Frankly, I think the world has fallen out with universal banking, and HSBC has tried to be so many things to so many people. So I think what we're seeing now is this ring fencing of the retail banking sector in the UK, and of course a concentration of where the growth is present, and that is within Asia, with a view to shutting down the likes of Brazil, but keeping some interests open, and also shutting down operations in Turkey. So it's about concentrating on the parts of the business that are working while moving away from some of the areas that clearly are not.
Robert, HSBC, it's taken this PR hit over the scandals, including the manipulation of currency markets, tax avoidance, money laundering. Will the moves announced today be enough to restore investor confidence?
Well, the share price was down 1%
yes,
today. Usually when you announce 25,000 job cuts, you get a spike in share price. So I'm thinking that investors are still uncertain as to whether that's enough. There's a lot of speculation about whether the company is going to move its headquarters from London to Hong Kong. I think Stuart Gulliver still has a lot of work cut out for him before he's going to win back that investor confidence.
Robert, what does this all mean about the landscape of banking in Europe, especially in light of what we heard yesterday about Deutsche Bank?
Well, I think, as Brenda said, a lot of banks are sort of reevaluating the universal banking model. UBS was one of the first ones in Europe in 2012 to sort of cut way back on investment banking, and shareholders have rewarded UBS quite a bit in terms of its share price and book value. And I think other banks are taking a signal from that to take some action. Europe has lagged behind the U.S. Banking sector in reshaping, cutting assets, and cleaning up the mess after the financial crisis. And I think they're finally now beginning to see signs that there's a lot of motion there.
Brenda, Robert just mentioned the CEO, Stuart Gulliver. Under his plan, the bank's going to cut some risk-weighted assets by about $290 billion, target a return on equity of more than 10%. Is that attainable, given not only the bank's size, but given that back in February, Mr. Gulliver did announce that the regulatory environment was making things difficult for the bank?
Well, I think it's certainly the case from the point of view of the UK, and I think it's a rather lofty achievement at this moment in time to get that return on investment by 2017. If the actual bank left brought its HQ towards Asia, it would more than likely save around $4 billion over the next decade. Bear in mind that there is a bank levy in place here by the current government, and the HSBC tend to pay the most off that because the majority of its balance sheet is based out of the UK, which is about $700 million per year. So moving the HQ would possibly be good for the bank, but would not necessarily be good for the UK economy. The financial sector makes up about 8% of GDP, but it does look like a very likely scenario, given the fact that the government does appear to be playing hardball in relation to regulation and levies.
Brenda, what does this mean for the future of the biggest players in Europe then?
Well, I think at the moment, as has been said, they are very much lagging those of the likes of JP Morgan and, of course, Goldman Sachs. But if you look at the Eurozone as an overall picture, we have seen better growth, we have seen an increase in business investment, and, of course, we have quantitative easing. Net interest margin will continue to be something of an issue, but we are starting to see a little bit of a move in bond yields as well. So I think we're coming in at a low base, and there may very well be opportunity, but I think HSBC might not necessarily present the best opportunities when you take in context with some of the other UK banks.
Robert, part of the other news that we heard today, HSBC announcing it's going to sell operations in Turkey and also in Brazil. What's the motivation for leaving those countries?
I think you saw a similar set of moves by Citigroup pulling out of a bunch of countries. Brazil and Turkey are big economies. They're not small little countries, and I think it's a significant departure from this notion of banking everywhere. And I think you're going to see more consolidation like that in the future.
Are banks doing what the administration has said? Are the banks now making an Asia pivot as well? Is that where they see that?
Yeah, there's a higher growth there. I think HSBC has a long history in Asia. I don't know what Brenda thinks, but I'm betting that HSBC does not move its headquarters because they'd rather have the levy in Britain than being under Chinese law in Hong Kong. I visited their headquarters in Shanghai once that were taken over by the Communist Party in Shanghai to make it the city government headquarters, and I'm not sure they want to subject themselves to the same vagaries of life there.
Brenda, we've been mentioning during the course of this interview about the restructuring plan. Would it change course if HSBC were to relocate from London because of those regulations, the regulatory burden, and because of that higher tax burden as well? Is that possible? It would change the dynamic here?
I think it's quite possible, but I think at the moment it's been used as a threat, really, that there could be a possible pullback in the dividend yield, or even like a lack of a hike in the dividend yield to shareholders. And this is what's been held over George Osborne's head here in the UK for the time being. But I do feel that with the exposure to the Eurozone and the fact, like I said, that we are starting to see signs of growth and a little bit of an improvement in business investment and credit, then I think it might be a little bit short-sighted to move lock, stock and barrel towards Asia. You also have, of course, several issues with regards to credit in regards to Asia as well, and that is something that might be in the short term something to be concerned about. But I do feel that they will ultimately start to focus and reconcentrate their efforts where the revenue is, and it's about 78% coming from Asia, and you're looking at about 8% from the UK.
And Robert, let me let you get the last word in here. What message does a move like this send to European banking regulators?
Well, the European banking regulators are, consolidating their control over the banks. They just moved from national regulators to the ECB regulation, and I think they've toughened their stress tests many years after the U.S. did the same thing. So I think Europe is beginning to get its act together, both in terms of on the regulatory side and the banking side. And banks, judging from their performance here in the United States, there's still a lot of profit to be made. J.P. Morgan, Goldman Sachs, they're doing pretty well in terms of profitability, and I think there's positive signs for Europe down the road as well once this restructuring takes place.